Okay, everybody, it's me, Gregory Mannarino. It is Thursday, July 29th, 2021, and this is going to be an interesting one here. Several things are going on that you need to know about. Let's start off with, again, economic news. So every Thursday, we get first-time unemployment claims for the preceding week. It came in at another hideous number. Another 400,000 people applied for first-time unemployment benefits last week. Now, economists polled, they got it wrong yet again by a large number. So this was, of course, unexpected. These people are brain dead. They are brain dead, and I guess they're drinking the Kool-Aid, buying the bullshit. I don't know. But if you were catching Bloomberg this morning, those commentators, they're like, we don't understand this. Why is this happening? Because our economy is in free fall with no end in sight. It's just the Fed propping this entire thing up. And again, on Bloomberg this morning, they had former Fed President William Dudley. Did you ever see this character, this thing? He's another hideous creature, from the Fed, former Fed president. And he's explaining how powerful quantitative easing is. Here's the deal with regard to quantitative easing being a powerful tool. Absolutely. It's the premier tool of power used by central banks during economic meltdowns, for which we are in one. That's why it's called emergency monetary policy. Now, with power comes risk. And you have to understand, I think you do, this is a complete abuse of power here. During the meltdown of 2008 here, the Federal Reserve did need to act. The Dow was cut in half. What the market was trying to do was get out distortions. That's why markets crash here, really, try to correct incredible distortions. But in my view, the Fed needed to do something to get the credit markets to, unfreeze. They were locked up. A lot of people don't understand that. So in 2008, when the Fed initiated quantitative easing just to unfreeze the credit markets, that's when they should have stopped. But they didn't. They said, hey, hold on a minute. This mechanism really works well to prop up the stock market, and we can inflate another housing bubble while we are at it. And this mechanism has been going on since that time. It's an incredible thing. And this has caused people, I can't even get my head around it. The distortions that now exist across the spectrum of asset classes because of the misuse of a powerful tool, according to, William Dudley here, former Fed president. Yeah, it is powerful, but it has caused massive issues across the entire markets globally. And that's going to be a problem that everyone's going to have to answer to at one time. I think we all know that. Anyway, so that's the story this morning. Now let's look over at the market here. Crude oil is surging near $73 a barrel. Silver up 3%. So surging silver. You got gold higher. Cryptocurrency is under a little pressure right now. 10-year yield somewhat stable, and the dollar is weaker, markedly weaker. And the dollar turned yesterday weaker after being higher after, Yellowstone Powell, Fed Chair Powell, made his announcement that QE will continue pretty much indefinitely. The Fed, and this was his own words, is not even considering raising rates for a very long time. So this means tons of more easy money for this market, which will be hitting record highs within a short period of time. Suppressed rates from here to, kingdom come, whenever that is. Grand theft on an unimaginable scale. Middle class people getting robbed blind, not being able to earn an actual rate of return on anyone. Nobody can earn a real rate of return on, let's say, a savings account with surging inflation. Even high yield savings accounts are paying like 0.4% per year. And the Fed yesterday admitted they are way over their target of 2% per year. How does that work? You want to explain that to me? Anyone who has cash, understand, in a savings account, even if it's a high yield one, is being robbed blind in this environment solely to prop up the stock market, to give the illusion that we are in some type of recovery, and we are not in any kind of recovery. We have not recovered anything at all since the meltdown of 2008. All they have done here is, set up a mechanism here for the Federal Reserve to own it all, to be the lenders and buyers of last resort. And nobody except you and I want to talk about it or get something done here. They are a crime syndicate of the highest order, and they are the Fed, the most powerful organization to exist on the planet today. And we all know who or what is the enforcement arm of the Federal Reserve, and that is the entire military might of the United States, and they enforce the petrodollar via that mechanism. Most members of the military have no idea that they are mandated to protect the oil of OPEC nations, henceforth why the petrodollar exists. It's an insane, twisted mechanism, people. And like I said yesterday and every day for the longest time, when you hear something and you look at the current environment, you got to sit back and say, hey, what is actually going on? And what really is going on, people? This is a global takeover. Without firing a shot, central banks around the world working in concert to own the world. It's an incredible thing. You don't need standing armies anymore to take over an entire world. Earth is being taken over here simply by central banks who are being allowed to create their product out of thin air in any amount they want to and just buy assets. And the Federal Reserve, in case you forgot, is funneling dollars around the world to central banks around the world who are buying assets with dollars. Yes, you're not supposed to know that. That's a really big secret. Anyway, so in summary right now, stock futures are higher not across the board. Dow futures are higher, S&P futures are higher, NASDAQ futures are lower. But it's a nice setup today, a nice setup for the market. You got crude oil getting propped up. You got the 10-year yield stable and a weaker dollar. It's a nice setup for the market. What would you expect after yesterday? And anyway, I do also believe we're going to see some volatility today in this market as, the participants here start to digest what came out of the mouth of the Federal Reserve yesterday, public enemy number one. People, they are public enemy number one, and something needs to be done. Okay, it's all the distractions. Look here, don't look here, blah blah blah. Blame supply chain disruptions and energy prices for inflation. Oh no, it's not the Fed. It's not the Fed. The Fed is the root cause of this entire thing, and you all know that. None of our representatives, they don't want to do a damn thing about it because they can't, because they're not the real government. All right, people, I'm out of here. Love you a lot. I'll see you at the end of the day. Please share this video.